Hello friends, this is Raj Sastry from Raj Option Trading. Today is October 16, 2021. I want to talk about one of my favorite stocks. It's a TREX. TREX is a building products and equipment company and it does beautiful decking as you can see here. A lot of friends I know they use TREX for their decks because it lasts longer and does not rot. So with that, TREX really outperforms wood. It's a great company and also great brand. So with that, let's jump in and get started and see what happened to TREX. So as you can see here, TREX stock tumbled big time and the stock shed around 10.5% in 1 week. And it's really around the analyst downgrade here. We got analyst Timothy Wojs. He anticipates a lower demand and he's downgrading the stock here due to labor, material shortage, and seasonality. And also, he's bullish on the longer term prospectus. Only thing is a little bit worried about the short term here. That's why stock tumbled big time. And generally, as you know, there are supply chain shortages, there is labor shortages, there is inflation. All these things are taking some pressure or having some pressure on the stock here. Let's dig deeper and see if it's worth buying it here. So as we look through this company here, we got reviews from Glassdoor.com here. We got CEO Brian Fairbanks. As you can see here, he's got a nice rating, 94% rating. And he joined TREX back in 2004. He held various roles. He was a CFO also. And then finally he took on the CEO role. And he was also with the companies like Ford Motors, and he was he's a seasoned veteran here. I know he knows how to navigate this company here. Overall, nice approval here. 94% is a great rating here. I think CEO checks out here. So with that, let's look at the company here. They got 25 years of experience and leadership in this building materials market here, and they are engineering the next door living. As you all know, with COVID, with all these issues going on, folks want to live outside more and more. They want to spend time outside of the house. That's when the decking will come into play, and a lot of folks will furnish their deckings and replace it with the TREX and basically make sure it's a good hangout for them with all this pandemic going on. That's a secular trend for this company. That's why they are number one in the consumer awareness and search. Great company to buy stock. So with that, let's jump in here. As you look through here for TREX, number one competitor is wood. As you see here, we got total market here. Out of that, 78% is wood and 22% is composite. And TREX want to grow this. They want to grow this composite market and make sure it's more and more competitor for this wood market here. So market share, they got a lot of market shares to take here. They got this addressable market here. They can really take a big bite out of this. And TREX outperforms wood. Anybody who has got a deck knows it. The decks rot and you got to keep painting it all the time and stain it. So whereas TREX, it's a more lasting here, superior product, even though it could be a little expensive to begin with. So with that, as you look through here, they got various things going on here. Company has got strategic growth drivers. They want to reach and improve the brand, expand the brand, and allocate capital nicely. I think they're doing it nicely with the capital expansion here. So with that, let's jump in here. As you look through, company have done great. Look here, 16% compounded annual growth all the way from 2016 to 2021. I think it's a great growth trajectory here. Company is really doing nicely. And they got here EBITDA also 19% CAGR, which is great. And they got consolidated EBITDA also doing nicely. So overall, the company is trending in the right direction. I think TREX is a great solid company and they know how to grow the market and also allocate capital properly. So with that, company has got a lot of recognition here. one of the best companies, fastest growing companies, America's best mid-sized companies. And as you can see, a lot of accolades in the market. It's great to see Trex getting all this recognition. So with that, if you look through the company, it's into wood and plastic composite products and primarily in the residential decking area and railing. I think company is doing great here. Stock price is 93 after the big drop here. Nice market cap, mid-sized company, $10 billion here. Look at the stock chart here. Nice looking stock chart. It's a weekly chart here. Goes all the way to 2019, around 2019 time frame. It had some drops, as you can see here. One drop, one more, one more, one more. So every time it drops, it always picked itself up. So this time it's no different. There are some constraints around the supply chain, labor shortage. I'm sure the company will overcome it. We'll go into a little more details and see if the Trex is a great time to buy right now. So as you look through here, stocks slumped big time, mainly because of this analyst downgrade here. Company are doing great up to that point, and also they had an earnings release back in August, and they also said, there is some, pressure on the margins due to this inflationary and the labor shortage. That's why, coupled with this downgrade, stock came down pretty hard. So at this point, it's below its 50-day moving average, as you can see here. I think probably it's a good time to buy, but we'll look further and analyze and take it from there. So as you look through here, there are not many companies with this type of growth trajectory here. Earnings per share, nice uptick here. Companies making money. It's a profitable company. Annual sales, nice uptick. Year after year after year, it's putting up nice sales here. This is where they're competing against the wood, and folks understand Trex is a better product. And shares outstanding, it's gradually decreasing, as you can see here. That's also good here. So overall, company checks out from an EPS perspective. Sales, nice sales growth here. Outstanding is pretty stable. I think that's what we want to see in a company. And if you look through the competition here, as you look through, we got building products and equipment market here. So as you look through here, we got the direct competitor, which is right here, as AZEK here, $35 stock, and we got Trex here, which is about $10 billion market cap here, $93 stock price. Look here, nice sales growth, 1 year 24%, quarter over quarter 41%, gross margin very nice, clearly checks out the rule of 40, and also it's got net margin. Company is profitable, it's not losing money, and also if you see here, very low debt here with the debt to equity 0.1. So overall, I think its company is doing great. As you look through here, after this drop here, company still has 19% performance this year. So far, that's good to good. So as you look through here, look here, 5-day 11% drop, 10-day 8% drop, 1 month 13% drop. I think that puts our RSI to 29, which is completely oversold. I think it's good time to buy some Trex here. And if you're a put option seller here, you could sell some put option given there is a high IV percentile and low RSI. Good time to sell put. That way, if the stock comes to your strike price, you could buy this great company. As you scan through here, you could see there are great companies here. We got CNR here, $14 stock, doing nicely. Little bit low net margin, but still it's good. And as you look through, we got Builder BLDR here. This is also a great stock here, $11 billion, doing nicely. 87%, 187%, so on and so forth. Keep watching the net margin. 19% here. I think this is one of the highest, if not the highest. We got here LPX, which is one of the favorite companies here. Very nice gross margin and very nice net margin. This one is better than Trex here from a net margin perspective. And we got few more. I think these are all great companies. You could look at the stocks with a nice net margin here and gross margin. Pick some of those stocks here with the low RSI. That gets us back to Trex here with the low RSI of 29 And there's also this swim here, which is there is not too much growth here, as you can see here. Probably a little newer company, but it's got RSI very low. So with that, let's jump in here and get started and see if TREX is the best one to buy at these levels. So as you look through a little more into fundamentals here, stock price is $93, and I love looking at this type of chart all day long. The reason is it tells me where is the stock and how it's performing, what's the trend. If you look at some numbers at one time, it doesn't paint the picture. But if you look at the numbers like this, quarter over quarter over quarter, that tells you how is the company doing, what could be the forward projection. So with that, let's jump in here. From market cap perspective, clearly back in 2019, it was a $3 billion company. Slowly but surely, market cap increased. Right now, it's about a $10 billion company. So that tells you this company is really grabbing the market share, growing its wallet size, and increasing the market cap. That's what I want to see in companies. Look at the stock price here. All the way from $30 back in 2019, now it's 102. After the drop, it's 93. I think that's also a great one. Company is slowly but steadily increasing its share price. Look at the sales number. Top line is growing nicely, $180 million back in 2019, all the way to 312 back in 630. That's a great growth here. Steady Eddie type company. Look at the sales quarter over quarter change. Nice double-digit change here. That's also good to see. Not many companies can put up this type of sales quarter over quarter. Nice earnings per share. Companies making money, as you can see here. And they're also surprising Wall Street many times, even though last time it was in line. And they got some cash here. I would love to see a little more, but they're also investing in their own company to expand their capacity. That's why they do have some cash here, but not like before. And if you look through here, they do have some debt, but not too much debt, which is manageable here. Debt also came down from 171 to 88. That's good. Debt to equity ratio also improved, as you can see here. I love to see companies reducing their debt. This ticks that box here. They do have a lot of free cash, as you can see here. It improved from last quarter. They do have operating cash, nice gross margin. There is some pressure, as you can see here, due to labor shortage and some of the transportation cost, but I think it's going to improve as you go forward. Nice margin here, operating margin, net margin, a little bit, as you can see, there is a little bit pressure due to this issues around supply chain. And as you can see here, both ROE and ROA, return on assets, return on equity, both double digits. I love these numbers. That shows company's leadership is really doing the right thing here. From a price to earnings perspective, it's a little pricey, but companies like TREX, you should look at price to sales. It's not very expensive, from a price to sales perspective. So overall, by looking at this chart here, I know companies can do very well. There is some temporary weakness which many stocks are undergoing right now with the labor shortage, inflationary pressures, and increased rate for the labors. That's why there's some temporary weakness here. This company can look past this weakness here. I think it's a good time to buy with this 10% drop here. Slowly accumulate the great company like TREX. So as you look through here, let's look at the quarterly earnings from August 2nd here. They are expanding, as you can see here, $2 million expansion program that can really reduce their cost structure as you go forward. They do have some labor constraints that they talked about. Even though this analyst pointed out, the company was upfront. They talked about it back in August. It's not a surprise at all. But I think analyst downgrade really brought the stock price down here. And they're also reducing the cost, as you can see here, looking at recycled low-cost streams here. And they're taking advantage of their R&D program here and continue to drive down the cost here. And they took some single-digit price increase on most of the products because of the issues around supply chain and logistics. I think that's the right thing to do. And as you look through here, they had 41% increase as it comes to the sales number top line. That's always good. And they're doing well in the residential sales here, 43% increase here. And they have some margin pressure, as you can see here, due to this some startup cost to increase the capacity, and also inflationary pressure here. And net sales also grew here, which is also good. And they're also saying they will stick by their guidance here, which is also good. It's good to see companies sticking by their guidance as you go forward. So with that, overall, by looking at what companies told us in the earnings call, looks like they are doing the right things. They do talk about their inflationary pressure here, supply chain shortage, which is not a surprise at all. Even though downgrade came as a surprise, that's why stock dropped here. So as you look through here, let's look at the performance of the company over the period of over a couple of years. So as you look through here, this company is not a new company. This is a very old company. Stock is doing pretty nicely, as you can see here. Some down years, as you can see here, back during the financial meltdown a little bit, but came back up. Some down years, but overall company have done nicely, and they've done 11% this year. So that's why I feel it's expected company will have some issues from time to time. But by looking at this chart, if you bought this stock and stuck with it, you had made a nice amount of money. That's why I think it's a great company to start slowly buying this stock here, take advantage of the weakness. And if you look at the monthly performance here, there are some down months, as you can see here, but always it bounced back nicely. 16% drop, came back nicely. Some drop here, bounced back. So this is no different here. There may be some little bit drop here and there, but it will always come back nicely. Overall, a nice company. So if you look through the weekly performance, same story. Any drop, it's a good buying opportunity. I think they had some quarterly earnings somewhere in October or August time frame. They talked about this weakness here. Stock is dropping a little bit now. It's a good time to buy slowly and accumulate. And if you look through weekly performance, this is actually daily performance. If you look through daily performance of the stock here, I think it's doing pretty nicely. It had some down days, as you can see here. Couple days here. Couple days around 13th of October, August or so, 13th of October, it's a little bit bad here. 12th of October, 10% down, but looks like after the downgrade, now it's slowly trying to come back up here. That's the time you buy a quality stock like TREX. Look here, as you look through here, the volume, keep watching the volume here, 721, 642, and in thousands. During the drop, there is a huge volume spike, as you can see here. But now stock is going up in a nice volume. That's the great test to see. Stock is going higher, but volume is also high compared to the previous volume. That's a good sign here. That's why I think this stock has got room to run. Great company. So as you look through here, this is a good way to look at a stock chart here. I love to look at this type of chart here. This tells you over the period, over the years, all the way from 2021 to 2015, during the months here, how the stock performed. This will help us to understand any seasonality in the stock. As you look through here in a cursory look, looks like September, October, generally stock has some issues. No surprise, we have a drop in October and also drop in September. Then as you look through here, March, February, March, there is one more little bit weakness here, and May time frame some weakness. So by looking at this, we can expect this. So this is no surprise here. Seasonally, this time it's a little bit difficult, but once we passed October time frame, look here, November, can do well. December, there are some issues, as you can see here, but as we go into the new year, stock generally goes higher. But understand, these are the seasonal pattern here, which is in play right now. Once we kind of go through this slump period here, stock can go higher slowly. Most of the November, as you can see here, stock went up nicely, and also December at times it does nicely. That's why I think it's a good buying opportunity here. we should slowly accumulate the stock, great brand like TREX, and take it from there. Now let's look at stock chart here from Thinkorswim from TD Ameritrade. As you look here, we got a stock chart all the way from let's see here, somewhere in 2018 or so. There is a drop here. Stock came back up again, drop up. Nice looking chart. Overall, stock has done great. Anytime there's a big drop like this here, it's a great buying opportunity. One more drop, this is around the COVID-19 time frame, stock went up. One more big drop here, below its 50-day moving average here. I think it's also a good buying opportunity here. We should slowly accumulate. Look at the huge drop here, something similar to what happened over here. Maybe not to that extent, but still a big drop here. We should take advantage of this. Keep watching the RSI, Relative Strength Index. It went up here, came down, went up, came down, now all the way down here. I think from here we should see a pick up in the stock. I think it's a good sign. And if you look through here, a smaller 1 day, 1 year chart, stock had a drop as you can see here. Now see, look here, stock is trying to turn around. That's a good sign here. It's consolidating. We should take advantage of this and buy some. RSIs, after dropping a lot here, Relative Strength Index is stabilizing, trying to go higher. Impaired wall increased, so if you're a put option seller, you can take advantage of this, sell some put option, so that way if stock comes to your price, you can buy the stock and own it. And look at the on the balance volume. Even though stock is dropped, on the balance volume came down a little bit. Now it's trying to go higher again. And smart money is a little bit down right now, which is expected. Normally when the stock drops like this, smart money also takes a tumble here, but slowly folks will be buying. It will make its way higher. So as you look through here, let's look at the option chain and try to understand what folks are betting in the options market. So stock price is around 93 here. As you look through here, look at the 95 strike. We got open interest 67, but keep watching here. We got here 105. Lot of folks are buying call here at a cheap 250 or so price here, 250, 260 level. Basically piling up and buying a lot of this call option here. Option market is thinking in 97 days stock price will increase over let's see here, over this price here 105, and some folks are even betting it will go much higher to 110. I think options market gets it right. Stock is going to go higher. There's a nice chance it will go higher. And also look at the probability of touch here. This is good to look at this number also. Probability of touching, the number here 95 is 91%. So around current price, probability is always high. So that's why I don't need to worry too much about it, but generally it tells you what may be the probability. So if you're a put option seller, as you can look through here, you could sell a put option at 75, which is about $20 below the current price, and make a big nice premium of $1.15. That's a good way to own the stock. If it comes to 75, you can buy the stock outright because you sold the put option. Otherwise, you can make a nice premium by selling the put option at 75. So with that, if you look through here statistics, option statistics, number of call options sold 656, put options sold 600, pretty close to each other. That's why put call ratio is 0.91. I think it's good to slowly buy, accumulate the stock here. Can it go down a point or two? It can, but I think it's already going higher. It's good to accumulate a great company like TREX here. And if you look through here, what should I do? You looked at fundamentals, you looked at technicals. Now what should you do? So in a nutshell, stock shed 10.5% this week. The analyst downgrade here by Timothy Wojs, and he's thinking there will be lower demand in the third quarter, primarily due to labor shortage here and seasonality. And he has a bullish opinion on the long-term prospectus on this industry. And company doing the right thing. They're buying back and purchasing their own shares here. That's a good news here. And their gross margin, there is some pressure, as you can see here. Basically because of this inflationary pressures and transportation cost. I think they're going to get past this, and they're also anticipating some challenges, as you can see here, and a little bit lower EBITDA margin, which is expected due to this labor shortages and transportation costs. But they're firmly standing by their expectation for a strong double-digit growth in 2021, and they have a lot of programs here to do the capital expansion and increase the capacity. That's why I think it's a good stock. We should take advantage of this pullback here and accumulate great company like TREX and go forward. So with that, thank you very much. Happy investing and trading. Please subscribe.